Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank. Vishnu, happy to have you on the Monday morning.
Always a pleasure to
Monday
be here,
afternoon,
Brian.
rather.
Yes, I mean, you make it feel like it's the morning, so it's all good.
Now, before we get your insights, let's take a quick look at how the cryptocurrency markets are performing and then move over to regional stock markets. Now, Bitcoin is at 34,323. It's up 2.56%. Ethereum is at 2,150. It's up 2.74%. If you look now at regional markets, the Nikkei is at 28,554. It's up very sharply at 2.2%. The Shanghai Composite is at 3,556.93. It's up 0.93%. The Hang Seng is at 27,530.36. It's up 0.68%. The ASX 200 is at 7,325.1. It's up 0.71%. And the Kospi is at 3,247. It's up. The Straits Times Index is at 3,140.52. It's up 0.29%. Rounding up the numbers, we've got the Bursa Malaysia, which is at 1,514. It's the only one that's bucking the trend. It's down 0.37%. Vishnu, what's the reason for this very bullish Monday morning performance?
Well, Brian, I think at the risk of oversimplifying, we'll just put this down to a very bullish Friday evening for the New York session, where we saw Wall Street up at all new records. Of course, they were motivated by the fact that Fed could keep the tap on, and that meant that there's a lot more liquidity in the US. But also, I think China played a part here. China's 50 basis point triple R cut that's supposed to release, somewhere in the ballpark of 1 trillion renminbi. That also, I think, is adding to the fact that this gush of global liquidity is going to work out very well for markets. So that has translated very nicely into Asian session gains. And of course, I need not tell you that I think the only reason why Malaysia may be bucking the trend is the political uncertainties and disruptions that are coming up on the radar, which I think will get ahead of general market sentiments.
Now, that 1 trillion renminbi is 154 billion, and that's really equivalent to a very broad-based easing. What conclusion should investors draw from this?
Well, I think, with the PBOC, the Chinese Central Bank, it's always going to be a case of she loves me not. And here's why. I mean, if you ask a different set of investors who are looking at how PBOC is tightening up on certain parts of the property market, the property players, as well as you see the overall policymakers on the regulatory aspect of it tightening on the tech sector, one gets nervous about tightening. Whereas, this 50 basis point cut seems to have soothed many nerves. Whereas I think that the right way to look at it is that, we still have a broad picture of credit calibration. There's no brutal tightening going on. It's really feeling up the elephant by the three blind men, and everyone feels something different, whether it's the tail, the trunk, or the body of it. And one way to look at the liquidity that pumped in is it's not that they want a lot more to go in. In fact, the credit data also came out very strong for China for June. It'll be at over $3 trillion in aggregate financing. But the way to think about it is China is probably going to use this triple R cut to substitute for the medium-term lending facilities. So there you've got 400 billion expiring mid-July and another 700 billion expiring August. So what they want to give is markets a greater certainty, rather than adding a tenor to it, a greater certainty of liquidity being loose. But that doesn't mean they lose sight of the fact that they don't want speculation and they don't want froth, particularly in the property market and other aspects of the asset markets. So this is not a free for all, back to the casino call here. It is really about sending the right policy signal, saying that look, we're not tightening to the extent that they're going to set back the economic recovery.
Now, let's zoom on a little bit to Singapore now. The GDP data is going to be out this Wednesday. What is market expectation on that front?
The headline numbers are going to be pretty shiny. You're going to see something in the ballpark of 14 to 15% year-on-year growth. But bear in mind, there may be a similar. I mean, it is very sexy. But then we bear in mind that Q2 was the worst last year. Every economy in the region, save for China, which had the worst quarter in Q1, all other Asian economies had the worst quarter. So base effects are playing a large part here. Whereas if you look at the sequential Q on Q data, there's actually a little bit of a slowdown. There's a bit of a pullback from the 3% jump in Q1. And that, I think, reflects some of the tightening measures that were taken in response to COVID resurgence. And I think we will continue to see a recovery playing out from here, but one that's going to be very dependent on how the larger Asia scene works out in terms of vaccines and reopening of the economies. So Singapore will not go it alone because it's small and open. And that's what we want to keep in mind. This 14% print is going to be a one-off. It's going to moderate substantially. We are probably going to see full year growth for Singapore above 6% for the year. But really the story that we should focus on is what sustainable growth is after that. And that's probably going to settle back in the 2.5% to 3% region, at least initially.
Now, we've got a lot of data coming out this week and events as well. So we've got Jerome Powell on Wednesday and Thursday giving testimony. We also have earnings season kicking off in the US. JP Morgan, Goldman Sachs, Citigroup, Wells Fargo, all reporting earnings. What are the other key events and data points that we should be looking out for the rest of this week that will move markets globally?
I think globally, if we are looking at the big themes that are playing out, I would say that the one thing that we want to keep in mind is exactly how the doves are playing out. So we want to look at China's GDP that's going to be out later this week on Thursday. We also want to see how India's GDP plays out, because India might give a little bit of a warning signal in terms of its inflation really getting a little above its target. And that may be a bit of a case in point for the rest of the world, where inflation may get a little out of hands. And then we'll see how global liquidity plays out in relation to inflation in places where it's getting a little out of hand. So that I think remains something that investors want to watch, whether liquidity is enough to wash over inflation numbers or not. We also want to watch some of the central banks in the region. We've got the Bank of Korea that's coming out, and let's not forget Bank of Japan. What would be interesting for us is to really line up the Fed, the ECB, and the BOJ. The Fed has already said not yet. They're probably signaling to September. The ECB had the most interesting stance because they were looking at revising their framework. But rather than going all the way towards the Fed in terms of average inflation targeting, they have just revised their goals to a symmetric 2%, because last time they used to be averse about inflation going above. So that's somewhere in between. So what's interesting to watch is whether the BOJ unequivocally says that it will lag the Fed in terms of tightening. So that's worth watching as well. And I think that will give us a flavor of where policy comes in, as you rightly pointed out, and how the cash flows and the earnings come in to meet in between and see what kind of tights it creates.
Now, Vishnu, as always, thank you very much for coming on the show.
My pleasure, Brian. Thank you.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please subscribe and like to our various Facebook and LinkedIn pages, as well as our website, www.biztech.asia. Thanks a lot for tuning in.